Today we are going to discuss about the topic of income from house property in your taxation. As it is already discussed very clearly to you from your teacher, I think I can give you a brush up of what is there in your income from house property. So what is income from house property? It is a non-head of income in your 5 heads of income which is available in your total individuals, right? Individuals income from individuals. So what is the house property? It is divided into two. One is self-occupied, another one is your let-out house property. One is your let-out, another one is your self-occupied. If we are occupying by ourselves, that becomes your self-occupied house property. If not, then it will become your let-out house property. So we have to calculate the net annual value for that particular house property. So when we are calculating the net annual value, this annual value will be fixed by many persons. One by your municipal corporation, another we will be calculating the fair rental value by comparing the value with the other premises, the same level of premises which is available in a particular region. That is known as your fair rental value. Another one is your standard rent. The standard rent is nothing but the rent which is fixed by the Rent Control Act. That is known as your standard rent. So what are the things we have discussed? One is your MRV, another one is your FRV. MRV is your municipal rental value. Next one is your fair rental value. Another one is your standard rent. Another one is your actual rent. Actual rent is the rent which is fixed by the owner of the property. Okay, the owner will be giving the fixing the amount to that particular property. That is known as your actual rent. Are you able to understand? So these are the four categories in which we are going to calculate the net annual value, or we can say that as your ARV. That is annual rental value of that particular property. This is the thing we are going to calculate for the income from house property. Are you able to understand up to this? So what we are going to calculate? ARV. What is ARV? Annual rental value, or otherwise we can say that as your NAV. NAV is nothing but your net annual value. So this is the thing regarding your let-out house property. You can question to me, what is self-occupied? Self-occupied is nothing but the thing which is occupied by the same person. If you are owning the house, you will be occupying your own house. It will not be given for any rent. That is known as your self-occupied. For this self-occupied house property, the net annual value is nil. Able to understand? Why it is nil? We cannot pay for the property which is occupied by us. We are not getting any income out of it. If you are getting any income from that particular property, for that property only you will be paying the rent. Or otherwise, you will not be paying the rent. When you are paying the rent, automatically you have to calculate what is the gross annual value, or your net annual value, or your annual rental value for that particular property. Or otherwise, if it is self-occupied, then it becomes nil to that particular property. Are you able to understand these two terms? One is your self-occupied, another one is your let-out house property. Are you able to understand? Any doubts in this? So, how to calculate the let-out house property? For that we